You look at these numbers from FedEx. After close, the freight powerhouse reported a truly strong quarter with higher than expected revenues and a 70-cent earnings beat of $4.12 basis. Even better, management raised the low end of their full-year forecast for both revenue and earnings. This company spent years trying to cut costs and optimize its delivery network. Clearly, those efforts are paying off. And even though the freight division came in a little weaker than expected, that business has been struggling for a while now, and FedEx plans to spin it off next year. So let's take a close look with Raj Subramaniam. He is the president and CEO of FedEx. To learn more, Mr. Subramaniam, welcome back to Mad Money.
Hey, Jim, thank you for having me on your show. And I'm just delighted about this quarter. You know, we grew revenues 7% and bottom line 17%. And despite trying circumstances, I'm just shout out to the entire FedEx team who delivered these results.
Well, it's very clear that this is the kind of quarter that we've been looking for FedEx. The stock did run up in anticipation because I think people just understood that a lot of what you're doing, the cost-cutting programs, the longer-term really kind of like what you did with healthcare, which is obviously winning. You are starting to win one by one in the verticals. Tell us where you are in terms of taking share from everybody else.
Well, I think, first of all, as you said, we put in place a structural cost reduction program. We took $4 billion out in the last 3 years, and we have $1 billion target for this year, and we are on track for that. But I think the most important thing for this quarter was the revenue growth story. And we are, as you can imagine, FedEx is the heartbeat of the industrial economy. That's the global network that we have put in place. Our focus is always on differentiation and providing new value for our customers. So we are winning in key verticals, whether it's healthcare, whether it's aerospace, whether it's defense, and now the newly minted data center, and the AI investments. So this is a very strong quarter for us because we have been putting these plans in place for some time, but now the team is really executing, and I'm just really proud of that, proud of our teams.
All right, let's talk about the AI investment, in particular for your company. If I went to some of your more modern warehouses, would I see people or I just see robots?
Well, I think from our perspective, if you go to the newer hubs, you will see that there's this huge building that packages go through that facility in a matter of minutes with all machines. But there are, we have truck loading and truck unloading that is manual, and there are robotic solutions being built for that as well. But I was referring also to supporting customers who are investing in data centers. And when they talk about these, billions and billions of dollars of investments, that means they have to move these parts around the world. And we are in full support of that as well.
Well, go over that with me, because I know that for a data center, there literally can be hundreds of thousands of parts. I never really had an idea how they got there. They're going through FedEx.
Oh, well, we are part of the solution, obviously. These things are moving within the country. They're moving cross-border. And as our network, as we have built it over 52 years, this is in place now to move anything, any product from any one part of the world to any other part of the world, and moving through customs clearance, moving through borders, those kind of things. So we provide a unique solution for that business. And as the investment grows in this space, that translates to more B2B business for FedEx.
Okay, I was just going to go there. I was thinking, you know what? I'm listening to this man. Raj is saying to me, he's not talking about Christmas. He's not talking about holidays. That's B2C. That's a hard business. And the margins aren't that good. B2B, the margins are great. Where are you in some sort of transformation? We'll be thinking of FedEx as a B2B business that also happens to work for consumers.
100%, because the network that we have built over the last 52 years is really reflective of the high-value supply chains in the world. We are the heartbeat of the industrial economy. And of course, we can provide services on B2C on that platform. Obviously, we've seen significant growth on B2C as well. So, that's been a more prominent feature in the last few years in terms of what people are thinking about FedEx. But ultimately, FedEx is 66% of our revenue comes from B2B.
Okay, that's really, look, I would have, before you told me that, 2 years ago even, I would have said, all right, well, tell me how Black Friday was. Maybe, will Black Friday ever be an afterthought where you'll make good money, but you won't take your eye off the prize of business to business?
Well, we'll never take our eye off the ball for B2B. We have a very, very dedicated focus to support our B2B customers. I was just in our Memphis hub just 2 nights ago, and we put into place specific services that move our healthcare customers, for example. However, having said that, we are also, big in the B2C side of the house. We are having a very good peak. We're just right alongside of the forecast that we thought it was going to be. And it's going to be a high single-digit year-over-year growth for peak. We got one more week to go, so I'm not counting it all till it's all finished. But despite Mother Nature being a little bit finicky this month, our teams have done a tremendous job.
Well, if I were the Federal Reserve Chairman, I would say, well, wait a second. Everyone tells me I should cut rates, but these guys are growing at a high single digit. How do you figure why your business has far exceeded what the GDP growth is right now?
Well, I think we are executing at a very, very high level. We are undergoing 3 different transformations at the same time. The first is a networks transformation, both domestic and international. We're going through an organizational transformation with one FedEx, removing all the silos that existed before. And we're also going through a digital transformation. With all this, we are executing at a very, very high level, and I think that's part of the story. It's too early for me to say how much of it is market and how much of it is FedEx.
Now, what are we thinking Drive? What are we thinking Tricolor? What are we thinking about how much money you're saving?
Well, I think for example, from a structural cost perspective, like I said, we removed about $4 billion in the last 3 years. Our target was $1 billion for this year. We are right on track for that. We are halfway through this fiscal year, and we are more than halfway to that target. So that's going great. The Tricolor network has been absolutely fantastic, especially in this current trading environment. That provides us the flexibility and the precision and the resilience in this environment. And I think that's what's paid real dividends, especially as the trading patterns have shifted dramatically in the external environment.
Okay, so tell me about where Europe is compared to where it was 5 years ago.
Well, I think we are very pleased with our progress in Europe. It all started with service, and that's when about a few quarters ago, we had some challenges that we had to fix, technological challenges. We fixed that. We fixed our service. That translated into revenue growth, which translated into profit improvement. Having said that, we have a long way to go here. And so there's a significant upside for us to generate in Europe. We have put in, it's primarily 80% of the businesses in Europe is a ground-based business. Right. So we have now moved some of the top management from our ground business or the legacy FedEx ground into Europe, and that's paid huge dividends. So while I'm pleased with the progress, but we have significant upside ahead of us.
Okay, let's go China. You probably know China because your business council work better than anybody. Where are we? What are we doing with tariffs? How are we feeling about it? Can it ever be a growth business again?
Well, I think for, the supply chain patterns and trade patterns are changing. We're going from one equilibrium state that has been in place for 30 years or so to another, and we're right in the middle of that transition. China to the United States has declined significantly in the last 6 months, and we have flexed down our capacity significantly accordingly. However, as you've seen probably reports, China's trade surplus is actually up, right, meaning that there's more traffic going to other parts of the world. So our intra-Asia traffic is up, or Asia to Europe, which is primarily B2B actually, is up. And Latin America inbound is up. Asia to Middle East and India is up. India outbound is up. So these patterns are changing. The fact that we already have a scaled network globally in place, and the fact that we have intelligence on high-value supply chains coming from the bottom up, allows us to move with precision and agility, and that's what's helping us in this environment.
Has reshoring helped you? I know that when you talk about Eli Lilly, for instance, putting up billions of dollars worth of plants, that's healthcare, that's you. Mexico, largest trading partner, that's you. Yes. Fill us in about the new U.S. and what it looks like for FedEx.
Yeah, no, this is the point I was trying to make, because when we have our scale network in place, we are here, there, and everywhere. And that's what allows us to, if the traffic's moving from Mexico to the United States, obviously that's a big opportunity for us. And we are now, making moves all around the world. For example, we have direct flight launch from U.S. to Singapore connection, for example. We have launched a flight out of Dublin, out of Riyadh, for example. We opened facilities in Bangalore in India. We opened facilities in Istanbul. This has all happened in the last 6 months. So we're moving with pace. And we have, as I said, we have the intelligence of what's happening from the bottom up, and we can move with velocity here to cater to the demands.
All right, last question. How are we looking in terms of new planes versus old planes? I mean, MD-11. I mean, got some planes that people don't even know what they look like anymore.
Yeah, I think firstly, our thoughts go out to the folks at UPS because this is a terrible tragedy of the MD-11, and we offer all support there. And our fleet modernization program started in 2012. In fact, our age of our fleet now is younger than our competition because of the modernization program that they've been through. We have we've done a terrific job of managing the MD-11s. I was in the hangar on Tuesday night, and we got a phenomenal team of aircraft technicians dealing with the MD-11. We are waiting on with what NTSB and what FAA are going to give us a protocol, and we're ready to execute and get those planes back in the air.
Well, congratulations on a great quarter. I hope the rest of the B2C goes very well. It's B2B is in my heart because I know that's for big money, but you got to do both, and you do a great job. That's Raj Subramaniam, President and CEO of FedEx. Thanks for coming on the show, Raj. Really appreciate it.
Thank you, Jim. I appreciate it very much.
Okay, Mad Money's back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.